Hi friends, have a look at my screen and you will see that Nifty 50 in the last 5 years have given around 18.94% yearly returns in the last 5 years. And this is the most widely used index because Nifty 50 represents the top 50 stocks on our stock exchange. While at the same time, Nifty 500 Momentum 50 index has given around 35.77% CAGR return in the last 5 years. So almost an extra 16% every year is what Nifty 500 Momentum 50 index has managed. And just to put this difference in some context, if you invested 10 lakh rupees 5 years ago in Nifty 50, then your gains, assuming 19% CAGR returns, would have been around 14 lakh rupees. But if you invested the same 10 lakh rupees in a Nifty 500 Momentum 50 index, then your gain would have been around 34 lakh rupees. So more than twice the return is what Nifty 500 Momentum 50 index has generated in the last 5 years. And this is the power of momentum index investing. In this video, I'll speak about 3 momentum indexes and I will run you through with their returns, with their risks, so that you can get educated about 3 momentum indexes. My intention is to share critical data points with you for you to make decisions. None of these indexes are recommendations. So please make sure you also do some research at your end. And people who don't know me, my name is Rahul Jain. I'm a full-time investor and a full-time content creator. With that, let's start with index number 1. So first index is Nifty 500 Momentum 50 index. And if I talk about point-to-point returns first, in the last 1 year, this index has managed to give almost 70% returns. In the last 5 years, it has managed to give around 35% returns on a yearly basis. And if you look at since inception, so the base date of this index is 1st of April 2005, the index has managed to give around 25% yearly returns. And these are point-to-point returns, and whenever we are investing in index funds or mutual funds, we have to look at the rolling returns also to bring consistency into the returns. So for that, have a look at my screen and you will see if we compare Nifty 500 Momentum 50 index with Nifty 50, most widely used index, and if we compare on a 3-year rolling returns basis, then from an average return perspective, it has managed to give 20.2% yearly returns, which is almost 8% or 7 to 8% higher than the Nifty 50 returns. If we check the 5-year rolling returns, clearly it has done better than Nifty 50, giving 19.6% returns. But you will also note that the minimum returns or the losses here are higher on the 3-year rolling return basis. It is minus 15.3%, and also on a 5-year rolling returns basis. And that brings me to the volatility of this index, extremely important concept that we need to understand. And volatility in simple terms is how much the fluctuation is happening in an index fund's NAV, and the majority of volatility is beta. Let me give you a very simple explanation. So the value of beta for Nifty 50 index, most widely used index, is at 1, while the value of beta for Nifty 500 Momentum 50 beta is on a 1-year basis is 1.28. What does this simply mean is that if Nifty 50 or Nifty falls by 1, then Nifty 500 Momentum 50 is going to fall by 1.28. It is going to fall more. So from a volatility perspective, on a 1-year basis, Nifty 500 Momentum 50 beta is slightly higher value. Therefore, it is more volatile. So if Nifty 50 falls, this is going to fall even more. So this is on a 1-year basis. But more interestingly, if you look at the 5-year basis or since inception, you will see that volatility of this index is in fact lower than the Nifty 50. So if Nifty 50 falls by 1, it is going to fall by 0.94 on a 5-year basis. If Nifty falls by 1 on a longer period, 20 years, 25 years basis, then this is going to fall by only 0.88. So the key takeaway here is that short-term duration, this index is volatile. And if you're only looking for short-term investments, this might give you a lot of volatility, and many people are not comfortable with volatility. Right now, the stock market are all-time high. And if there is a correction, then there is going to be a short-term pain. But over a longer period of time, this index has not shown higher volatility than the Nifty 50. Now comes the natural question. So Rahul, we understood about the volatility. What about the returns? Why is it that Nifty 500 Momentum 50 index has managed to give better returns than Nifty 50? It is mainly because in this index, top 50 stocks are selected from the 500 stocks, and only those 50 stocks are selected that have shown momentum, the price momentum in the previous 6 months to 12 months. And the entire thesis is that a winning stock may continue to win for some more time, therefore there is a room for some further rallies. And if I show you the latest top 10 stocks held in this particular index, you are going to note stocks like Trent Limited have been in a massive bull run, Bajaj Auto, Adani Ports, Bharat Electronics Limited. These are the stocks that have been in massive momentum in the last 6 to 12 months, and that is what is being selected in this particular index. And if you look at the sector allocation, you are going to note that this index has got 31.20% allocation in the capital goods, which has been in a very high momentum, while the financial services are only at 17%. Now, if I show you the Nifty 50 sector allocation and top stocks, let's do a quick comparison, and you will see that in Nifty 50, financial services is the major contributor by around 32%. And if you look at the top 10 stocks, you are going to see stocks like HDFC Bank, Reliance Industries, ICICI Bank. These are the heavyweights, and here Nifty 50 is mainly driven by the market cap, while Nifty 500 Momentum 50 index is driven by the momentum, and that is why it is a different style of investing altogether. Okay Rahul, how to go about investing in Nifty 500 Momentum 50 index? So this is a fairly new method of doing index investing, and I could only find one index fund for Nifty 500 Momentum index, and that is by Motilal Oswal. Right now their NFO is going on, and you can check it out if you are interested to invest in Nifty 500 Momentum 50 index. With that, let's move to index number 2, which is Nifty 200 Momentum 30 index. The concept is very similar, that rather than investing in Nifty 200, if we select 30 top index that have been in momentum recently, then this index comes into picture, which is Nifty 200 Momentum 30 index. If I talk about the returns, point to point returns here very quickly, last 1 year, this index has given around 68.91% returns, and if I compare that with Nifty 200 index, that Nifty 200 index has given 40.39% returns. So momentum index has performed better on a 1 year basis. On a 5 year basis, it has given 30.53 versus Nifty 200 of 21.5%. Even on a 5 year basis, this Nifty 200 momentum index has performed better than the Nifty 200 index. And on a longer term basis as well, if we see since inception, it has given 20.79% returns, while the Nifty 200 index has managed to give around 15.26% yearly returns. What about Nifty 500 Momentum 50 index that we just talked about, index number 1? And if we compare that on a 1 year basis, it is neck to neck, there is not much difference. But on a 5 year basis, Nifty 500 Momentum 50 index has given 35.77% return, while the Nifty 200 Momentum 30 index has given slightly lower 30.53% returns. So from a historical data perspective, Nifty 500 Momentum 50 index has performed slightly better than Nifty 200 Momentum 30 index, but it does not necessarily mean that this is how the future is going to be, as past returns does not guarantee the future returns. Now here is more interesting data. If we compare last 19 years, and if you look at number of years that Nifty 200 Momentum Index has outperformed Nifty 200, then out of 19 years, 14 times it has outperformed Nifty 200. So there seems to be a pattern here that Nifty 200 Momentum Index has outperformed Nifty 200 TRI Index. And also from a risk adjusted returns perspective, that can be measured by ratios such as Sharpe ratio. We look at the last 19 years, out of the last 19 years, 16 times Nifty 200 Momentum Index has beaten or outperformed Nifty 200 TRI Index. If I speak about the rolling returns, on a last 3 years daily rolling return basis, 88% of the time it has outperformed Nifty 200 TRI index, while on a 5 years daily rolling returns basis, 99% of the times it has outperformed Nifty 200 TRI index. What about volatility, Rahul? So from a volatility perspective, have a look at this data. Last 1 year, this has been more volatile, 1.24 versus 1.05. Definitely this is more volatile in shorter term, but if you look at the 5 years data or longer period of time, 20 years, 25 years, it is slightly better than Nifty 200 TRI index. So again, the conclusion is very similar here, that if you're looking for a shorter term investment, then there is likely to be more volatility in the momentum index. But over a longer period of time, more than 5 years of time, that volatility really is not playing out in the cases of momentum indexes. If I do the sector comparison between Nifty 200 and Nifty 200 Momentum 30 Index, very clearly you will note that here in Nifty 200 Momentum 30 Index, the maximum allocation around 23.62% has gone to automobiles and auto components, followed by the capital goods at 20%. While in case of Nifty 200, it remains market cap driven, and financial services followed by IT are the two top sectors. And if I compare the top 10 stocks between Nifty 200 and Nifty 200 Momentum 30 Index, again a very contrasting view here that it is not driven by the heavyweights from a market cap perspective. Stocks like Trent Limited, Tata Motors, NTPC are the ones that are taking the limelight or taking the lion's share in this particular index versus the Nifty 200 where likes of HDFC, Reliance, ICICI driven by totally market cap. Now comes really interesting point that if you look at the top 10 stocks of the first index that I talked about, Nifty 500 Momentum 50 Index and Nifty 200 Momentum 30 Index, you see there is a lot of overlap. So Trent Limited is in both, Bajaj Auto is in both, Mahindra and Mahindra is in both, REC is in both, right? So the key takeaway here is that Nifty 200 Momentum 30 Index and Nifty 500 Momentum 50 Index, index number 1 and 2, there is a likelihood of a massive overlap between these two. So therefore, if you want to have a diversified portfolio, I would say that instead of adding both of these, you might want to add only one of these. Okay, Rahul, how to go about investing in Nifty 200 Momentum 30 Index? Simply go to this free website called tickertape.com, mutual funds, start screening, and you're going to see a screen similar to this. In the equity section, go ahead and tick index funds. So it will bring all the index funds, but then you add another parameter here, which is called benchmark. And in this benchmark, you type momentum and you will see the Nifty 200 Momentum 30 TRI. Select that and you are going to see all the AMCs that are offering this particular index fund. You can now go ahead and do comparison of these AMCs in terms of their expense ratio, in terms of their average rolling returns, last 1 year's absolute returns and Sharpe ratio, and so on and so forth. And you can make your decision based on what your really parameters are. You can add a lot of other parameters here and do a lot of comparison and analysis, and based on what you are really looking for, you can go ahead and select your AMC. And so far, if you're liking this video, hit the like button. Let me know in the comments a simple thank you. It will motivate me to come up with such content for you at zero cost. And also let me know any other topics you would like me to create videos around in terms of mutual funds, index funds, ETFs, or any stocks. I would be happy to read the comments and create upcoming videos for you. With that, let's move to index number 3, which is Nifty Midcap 150 Momentum 50 Index. Again, a very similar concept. This index tracks 50 stocks that have been in recent momentum, but it selects it from the midcap stocks, which are 150 stocks from stock number 101 to 250. So midcap is the universe from a selection point of view, but it selects 50 stocks out of those 150 midcap stocks. Now, if we compare this with the Nifty Midcap 150 Index from a returns perspective, last 1 year, this index has managed to give around 66.13% returns, while the Nifty Midcap 150 Index itself has given around 50% return. So we know that midcap stocks have been in a massive bull run in the last 1 year, but this index has managed to give even slightly better returns than the Midcap 150 Index. If you compare the 5 years of history, this index has managed to give 39.93% CAGR returns, while Nifty Midcap 150 Index has managed 31.92%. And also, if you look at the longer term duration, more than 5 years, you will notice that this index has managed to give better returns, 25.39% returns compared to 18.64% CAGR returns by Nifty Midcap 150 Index. Now, unfortunately, I do not have the rolling returns data. I could not find rolling returns data for this particular index, something that we definitely need to look for, but unfortunately I could not find it. If any of you are able to find the rolling returns data, please let me know in the comments. It will be a very good value addition for all the viewers who are watching this video. But moving on, if we compare the volatility of this index, very similar story here. On a 1 year basis, the beta is 1.14 versus 1.03 of Nifty Midcap 150 Index. On a 5 year basis, almost similar, exactly same, 0.85. And on a longer term basis, it is 0.80, lower volatility than Nifty Midcap 150 Index by 0.84. So almost very similar volatility here. Again, the key takeaway is very similar, that if you're only investing for shorter duration of, let's say, 1 year, then this index is likely to be more volatile than the Nifty Midcap 150 Index. If we do the sector comparison between Nifty Midcap 150 Momentum 50 Index versus the Nifty Midcap 150 Index, again here you will see that the capital goods sector has got the maximum allocation by 19.59%, while in case of Nifty Midcap 150, financial services remain at number 1, but there capital goods is at number 2, 15.51%. Now if we compare the top 10 stocks between the momentum and the normal index, you are going to see that there is some overlap here. For example, Dixon Technology is in both of them, Cummins India India Limited is in both of them. Lupin Limited is in both of them. PB Fintech is in both of them. So here there is something very different, that the Nifty Midcap 150 and the Nifty Midcap 150 momentum has at least some level of overlap. But here is the more interesting fact. The index number 1, which was Nifty 500 Momentum 50 index that we talked about. Index number 2, Nifty 200 Momentum 30 index. And this index has very little overlap. I think there is no overlap. If I see the stocks here, Dixon Technologies is not there. Cummins is not there in any of the previous indexes. Oil India is not there. So it's an entirely different top 10 stocks. And the key takeaway here is that it is not overlapping a lot with the first two index. And therefore, people who want to invest in momentum investing, my suggestion here will be that Nifty 200 momentum and Nifty 500 momentum, they have an overlap. So one of them can be selected, while Nifty Midcap 150 momentum is not showing any overlap. It might be the second index that you might want to consider. Again, not a recommendation, but this data is telling us about overlap. That is very, very important when you invest in mutual funds. Okay, Rahul, how do we go about investing in Nifty Midcap 150 Momentum 50 index? It's very easy. Go to tickertape.com, a free website. I'm not doing any promotions for them. Just go to mutual funds and say start screening. You will come back to this screen. Exactly the same method. Go ahead and select the index fund in the equity section here, and then go down and add benchmark here, which is going to be in this case Nifty Midcap 150 Momentum 50 index. You are going to see the list here, updated list, and what you can do is compare these basis on the expense ratio, compare them basis on the last 1 year return, Sharpe ratio. So there are a lot of parameters that you can add and do some analysis on this particular index. So in this video, I have spoken about 3 momentum indexes. Let me know in the comments which momentum index is your favorite index, and have you really gained some knowledge in this video or not? I would love to read your comments. Your comments will motivate me to come up with such content for you more often. With that, I'll see you in my next video. Until then, keep rocking.